Hey traders, this is Blake Morrow with Trader Summit, and with me today I have Jake Wujastyk of Trendspider, one of the co-founders and really the chief analyst there. How are you doing, Jake?
Doing well, doing well. Thank you for having me on.
Well, it's great to have you here. And this time I'm really excited about our meeting because I know you had a lot of stocks you want to show us, some setups that you're looking at. So what I'm going to do is I'm going to go ahead and turn over to you the ability to show some charts, and I want you to show us what you're looking at. What specifically have you been seeing?
So when I look at the markets, I'm always kind of looking at a top-down approach. So I generally start with the indices before individual names, because the indices kind of create a base for sentiment across more individual names. So what I've been watching a lot is IWM, because IWM, for a while now, some would argue that probably Bitcoin's a better gauge of risk on, risk off at this point, but IWM is also a gauge of risk on, risk off. So when I'm looking at the markets to see, are things looking a little iffy? Do we have more downside? Do we have upside? IWM is really what I'm looking at. So when I am looking at IWM, I'm looking at it right now on a monthly and a weekly side of things. I'm more of a swing and position trader. And I really look at the markets in a longer term perspective in weeks to months, because the day to day is a lot of the time just noise. I'm not a day trader. I don't really care what's happening in 15 minutes. So I'm looking at really the monthly setup on IWM to get a gauge of risk on, risk off. And you can see on IWM right now, what I'm using is I'm just using, we have a channel tool in Trendspider, but you can actually use that channel tool to highlight zones rather than an exact trend line. So here you can see I'm highlighting this really long-term resistance zone that goes back all the way to 2000. And you can see we finally broke out of it in January of 2021, and have not done anything for the last 10 months. But you can see here that this previous resistance is now acting as support, and it has for a couple months now. And we have this bull flag setting up here, a decent month. It's still pretty mid-month, so you can't look too deep into the monthly candles, but you still can look at the monthly candles, especially previous months that have already closed, and see what those setups look like. So to me, it does look like the market's risk on. One, because of the technical setup. Two, if you look at the seasonality, pretty much since the financial crisis in 2009, November has a 92% win rate. So that means that 92% of the time, November has closed higher than October since we bottomed in 2009. If you want to do that pretty much since the 2016 reversals, we have a 100% win rate in November. That doesn't mean that we're guaranteed to have a strong move to the upside in November, but the historical seasonality is telling us that in the past, this has been a very strong time of the year. And then if you look at the technicals with that, it does look like we could have a pretty strong end to the year. So we'll have to see what happens, but IWM is kind of my base for why I have some bull cases here, starting with Fubo. Fubo is one, it's one of my favorite ones because it reminds me a lot of Roku in the early days. It's just, it's one of those things that, they do have some fundamental stuff they need to get through on the balance sheet and the accounting side of things, as far as kind of keeping their costs in line. But the main thing that I look at a lot of the time on Trendspider is something called the volume by price. It's not necessarily that proprietary to Trendspider, but what is the ability to easily move your anchor point. If you look at most people with a volume by price on the chart, you don't know where they're actually measuring that volume distribution from. The volume by price is just measuring volume as a function of price, meaning we're measuring how much volume has happened at different price points from a specific time, instead of looking at volume as a function of time, which is just looking at, okay, how much volume happened within that month or within that day. So what we're doing is we're really looking at, since June of 2019, where is the majority of this volume happening? Where has it been transacted? And it's right at this point of control, right around $25 a share. And you can see here that we've really been respecting that for some time now. And on top of that, you do have a little bit of this flag forming here on the monthly side of things. So this one is a long-term hold for me. I did make a trade on it from around 24.50. I actually closed the position today at 28.70 because we did start getting pretty close to the daily symmetrical triangle resistance here. So you can see here, same thing. I'm just using a zone. we had pretty much like 7 days up in a row. And, you know, you always got to lock in your profits. This is why trading around a core position is nice. I still have a position. I just got out of that short-term trade. So made some profits, locked them in, and then we'll look and see where it goes from there. So that's
I was going to say, that's always so positive when you're trading is being able to lock in profits along the way, making sure you book some. That gives you the flexibility to be a little bit more lenient with maybe some of the remainder of your position that you have. But do you also find yourself adding back into positions, and when do you do that?
Yeah, I mean, for example, I mean, so Fubo here, this is why another reason I took some off the table. We have a ton of break-even supply here. So what I'm doing is, you can see this vertical line here is right at the start of this symmetrical triangle.
Yeah.
And what's interesting is we can pretty much say this is the volume profile of that symmetrical triangle because we're starting the measurement at the start of the pattern. So what you can see here is we have quite a bit of volume up here. And whenever the price is moving up into this volume, it's going to act as break-even supply, because imagine you got in Fubo a little early, maybe 29, and you just dealt with a pretty big drawdown to 22.50. When you get back to that $29 area, you may take some off the table because you're finally back to break even. That's why we call it break even supply. Some of these people are lowering their position. So in this case, break even supply is right around that 28, 29 area. That's what's kind of holding me from keeping that trade around the core position. But if I were to get back in and add some, I'd look at on the daily chart a retest of kind of the anchored volume weighted average price. So I'm measuring the volume by volume weighted average price from this October 4th pivot. And that's down here around 25. So if it did kind of get back down to there, which would be healthy, that's where I'd look at maybe adding some, maybe even to the long-term position. So Fubo is one that I really like long-term, and it was a fun trade over the last couple of weeks. Awesome. Spotify is another one that I am very bullish on. This is one that is more of a longer term candle kind of perspective here for me, at least. I bought my son Spotify for a 10-year hold because I do think this is probably going to be a $200-300 billion company in the years to come. They've just got a really good platform. Everybody I know uses Spotify, and you know, it's just got a really nice setup on the monthly chart. You can see here that we've got this falling wedge. We've got a nice monthly candle for now. We still are in the middle of the month, so a lot can happen, but you still have to get a gauge on what does that look like going into the second half of the month. That's when you'll pull out the weekly chart. And the same thing here. If you'll notice I'm using the volume by price a lot. It's really a true gauge of supply and demand. Same thing with the anchored VWAP. If we do measure the volume by price from this reversal point, you generally want to anchor and measure volume from these different reversal points, these status quo changes. A majority of the volume is holding right around this general area. So if we can really kind of base at this area, the target above would really be around 255. But if we can get above that, that would really change this this downtrend that we're in to a reversal. So that's one that I really have an eye on, mainly for the monthly setup, but the weekly setup is also there. We really need to get through that 255 area. Next one is Penn. Penn Gaming. I'm sure a lot of people are familiar with this one. Recently had a monthly kind of flag breakout here. Ugly month for September, but decent looking setup here on the monthly chart for October so far. The main thing though that I'm paying attention to is the weekly setup. So if we want to measure the volume distribution from the COVID lows, you'll see here that we have a ton of volume here. So I like to call it a volume shelf because it's not the point of control. The point of control is way down here. And the point of control is just your largest volume node where that's the biggest price range that shares are holding at. But you can see here that there's quite a bit of shares holding here. And one question I got yesterday, you don't need to worry about the width of these volume nodes because they're wider here at the bottom because I'm in log scale. So the log scale is going to make those volume bars down here bigger because it's a different price range. So if we turn off log,
yeah, I was going to ask you, Jake, the volume scale is going to be it's going to match the length of the candle, correct?
Yeah, exactly. And if you're looking at something that has this big of a run up, the lower bars are going to be bigger because a $10 move at $20 is a lot different than a $10 move at $100.
Sure.
That's why the log scale changes like that. So if you go and add log scale, that's why it does distort the size of those bars a little bit. So Penn, I really prefer this over DraftKings, but I do like Penn as well. I have a position in this. It's an options position. So, you may be watching this video in a week and I may be out of it. But I got into the $85 calls for November 19th. I really do think we'll probably test 85 in the coming weeks. You've got a lot of sports going on. You've got NHL hockey that just started back up. People like to gamble. That's very obvious across my friend group. And then just how ESPN and some of these media networks are showing the spreads and all those different odds for games now. You never really used to see that. So Penn is one I think that will have a big move, and
Awesome.
the casinos are pretty packed right now. NNDM is a smaller cap name that I also like. So with the IWM looking good, NNDM is one I do like. We're right at the apex of this symmetrical triangle. The only issue is you do have a little bit of a volume up here, which would initially be break-even supply. So that's NNDM. Another one that is kind of on the opposite side of things is GE. So GE is one that I'm really looking at on the monthly chart. And you'll see the main reason is if we anchor the volume by price, pretty much from the reversal of this trend, this was the start of the downtrend. We have one, our volume weighted average price right at this current level. Two, we have an RS resistance support flip. So previous resistance is now acting as support. You've got a ton of volume here also acting as a support zone. The problem is GE can consolidate for quite a while before it does move. But I do think with the size of the market cap relative to what it used to be back in the early 2000s, this could easily be a big mover, especially with some of that infrastructure bill stuff coming out with a lot of renewable energy type initiatives coming out right now. So kind of a fundamental and a technical play. MGNI is another relatively smaller cap name, but I really do like this setup. You can see here that I pretty much just anchored the volume weighted average price from the COVID lows and then this previous high here. So if you look at the weekly chart, this is what's called an anchored VWAP pinch. This is something that was taught to me by Brian Shannon. Shout out to Brian Shannon. I give him a shout out all the time because I wouldn't even know what an anchor point is on a chart without him. So that's something that's really changed the way I look at the markets. And you can see here, you've got this pinch. It's kind of like a Bollinger Band squeeze where, you can see as the prices started to flatten out here, those volume weighted average prices are also going to flatten out as well. And a lot of the time you can get a pretty big move around these areas, especially when you've got the price above the point of control. I would really want to see a bounce pretty much above 32, which is this top node of the volume by price. And then something I always like to look at is just the raindrop. So the raindrop is a proprietary candle on Trendspider, and it really allows you to see the volume profile within a candle. So without having to go into, let's say you're looking at the weekly volume and you want to look at where that volume happened, you may need to go into the 2-hour chart or the 65-minute chart. Here, we can see where that volume profile is within the range of the week by just looking at the raindrop. So if I zoom in here, you'll see that we have a lot of volume backing this move to new highs. So the left bar is your volume weighted average price for the first half of the week. The right bar is your volume weighted average price for the second half of the week. If you're used to bar charts, your left is usually your open, your right is usually your close. In this case, it's VWAP for the first and the second half of the time period. And then you've got the volume profile actually overlaid on where volume has come in at these different price ranges. So you'll see we have a lot of volume near the top of the week's range, showing that there's possibly some momentum here. Now, notice we've also had the same candle for quite a while. So this is where you want to kind of bring in simple price levels here. You'd really want to break above this 3250 area before you really get too excited. But the setup is there on MGNI. Two more, we have MAXR. I just actually entered this position today. And the reason is it's been consolidating for quite some time. And you'll notice that I'm looking at the same pattern pretty much all charts. You know, you don't want to trade one pattern one place and another pattern another place. You want to have some consistency in what your entry and your exit signals are. So for me, you've got this falling wedge potential breakout here. You've got a lot of volume supporting the price. Notice that we were just talking about on MGNI, we want that price above this bigger node. We may get that going into Friday. If not, we still have a pretty big base here. And then my target would just be the volume weighted average price from this previous swing high, which is right around 33, which would be about a 10% move. And, you know, I'd likely stop out below this previous low. So the risk to reward is definitely there for me on this one. Last one is DKNG. So DraftKings, another gaming stock, if you will, or betting stock. And this is actually utilizing the raindrops in a different way. So I like to use the raindrops to visualize that volume flow within candles. But the blue raindrop is something that I also look at a lot. So the blue raindrop, a lot of the time, can be a measure of reversal points, especially when you haven't had one in a while. So notice here, 1, 2, this is our first example. We topped out in March of 2021. We did not print a blue raindrop until we bottomed here right around May of 2021. And that was our reversal point. Notice what happened after that. We moved up significantly, printed 2 raindrops, and that was our short-term top. And then we did print a few blue raindrops that didn't really have any weight. And that's why I like to personally use these once you haven't seen them for a while. So same thing here, topped out in September around 64, pulled back, have now printed 2 blue raindrops at this bottom. We've got this kind of rounded bottom forming. And then my target above, initial target would be around the 53.70 area, which is that volume weighted average price from the swing high. So
what turns them blue, Jake? Explain to us. I mean, I understand the buying and selling and the red and green, but explain a little bit more detail what the blue represents.
Yep. Thank you. So I did forget to mention that the blue is just when the volume weighted average price is equal on each side. So it's essentially a volume weighted doji. So your VWAP on the left is equal to the VWAP on the right, which is the first and the second half of the candle time frame. And you can see here today, this is the daily chart. We still have quite a bit of time left in the day, but notice a lot of that volume is aggregating at the top of the range. That means that you've got buyers willing to absorb that supply at higher levels on the daily range. Now, I also like to use lower indicators when we do have some overextensions, underextensions. This is one where you do have the MACD crossing as well. So you do have that self-fulfilling prophecy maybe coming in to play a little bit. You've got some of these MACD players coming in that see the cross. A lot of people use scanners. You run a scan on MACD crosses, you see DKNG, and then that comes on your watch list pretty quick. And that's how you get new participants in the market as these different variables start to play out.
That makes a lot of sense. Well, you know, I was noticing a lot of proprietary features of Trendspider, and that's one of the things I love most about the Trendspider program. Now, let me ask you this: when you were looking at seasonality with IWM earlier, how did you find that?
Yep. So you just go to the sidebar here, and there's a lot of widgets that do have some proprietary things on the platform using the sidebar widget. So you just go to the sidebar widget. I already have it pulled up, but if you add or remove widgets, just go to add new widget here at the bottom. You can add your watch list or your scanners. You can add alerts. You can add your news, analyst estimates if you want to look and see what the sentiment is on the analyst side of things. Seasonality is also one of these. You can see insider trading if you want to know, is there any insider buying going on? Insider selling is a little harder because insiders sell for a lot of reasons, but they really only buy for one reason, because they think the stock's going to go up. And then you have the smart checklist, which is something that's really cool. It allows you to look for something that is maybe aligned. So for example, a lot of people look at full time frame continuity. That's a term that was termed by Rob Smith, who is part of the Strat movement, and he really started that. So if I wanted to go and I wanted to look at full time frame continuity on the daily, the 65-minute chart, the 15-minute, and the 5-minute, maybe I'm a shorter term trader here, this will actually show you how many of these time frames are green, which one is not green yet. And then if you're a longer term trader, you could type in the same thing and look for the monthly, the weekly, the daily, and the 65-minute, and you can see which ones are still yet to be green. So this is something that really helps traders that are looking for a lot of time frames to line up either red or green. And that's the smart checklist feature as well, something that's really popular on the platform.
That's awesome, Jake. Well, I'm super excited about what you showed us today. We got a lot of different ideas, a lot of actionable ideas. I noticed you use a lot of consolidative patterns, like most basic technical traders would see them as a flag or maybe a triangle, a nice consolidation, looking for a breakout, and that consistency is great coming from you. So let us know, how do we find out more about Trendspider and you in particular?
Sure. So you can go to trendspider.com, and that will really be the main website where you can check out all of the different features. You can check out the pricing there as well. So you can really just see what plan works for you. And then we have our blog, we have our university. So if you are a newer customer or even trader, we've got a bunch of resources here that you can look at and become more knowledgeable in technical analysis and charts before maybe you pull the trigger. We have a 7-day free trial. We can extend that another 7 days. So that's something that we can offer that to you, and then you, as the student, or I call it a student because everyone's a student in the market. You have to put the foot forward to learn this stuff, and we give not only the resources to do that through our YouTube videos, and we also have a full web platform tour, but we also have one-on-one demos as well. So if you need a one-on-one demo, we have a team that will walk you through the platform and answer any questions you have for an hour at a time. So there's a lot of resources to help you become a successful user of the platform, and hopefully a better trader, getting an edge with some of these different features that we have. And you can use BLK25 for 25% off any plan if you do decide to sign up. And that is good for any plan, monthly or yearly. And we want to make the platform something that you use for not only your technical analysis, but also some of your non-technical stuff like seasonality, analyst estimates, those types of things that you don't necessarily think of when you're thinking of charts. We want to be your one-stop shop for all types of market analysis.
Well, Jake, thank you so much for stopping here at Trader Summit today, giving us all these great ideas. And I can't wait for our next time that we talk. I want to see how this list of eight or nine different stocks that we talked about, see where they've gone. So thank you so much for spending your time with us today.
Hey, thank you so much for having me.